Welcome back to Dinar Community Channel. Over the past several decades, the Iraqi dinar IQD has been viewed primarily as a speculative currency with limited utility in global markets. War, sanctions, political instability, and lack of financial modernization have long clouded its value. However, recent geopolitical shifts, economic reforms, and key banking signals are challenging that outdated view. Central banks around the world are now paying closer attention to the dinar, many for the first time in decades. This transformation is not accidental. It's the result of calculated policy changes within Iraq, improved regional relations, a drive toward de-dollarization, and a broader recalibration of global reserve currencies. The world may be on the brink of a monetary shift, and the Iraqi dinar has emerged unexpectedly at the center of it. One of the most compelling factors behind the sudden interest is Iraq's stabilization and modernization of its monetary system. After years of turmoil, the Iraqi government, under Prime Minister Mohammed Shia al-Sudani and with support from the Central Bank of Iraq (CBI), has implemented a series of aggressive economic reforms aimed at strengthening the dinar. These include reducing dependency on the US dollar, digitizing financial transactions, increasing foreign reserves, and tightening monetary controls to eliminate black market currency speculation. These reforms have not gone unnoticed. International financial institutions such as the IMF and World Bank have recently praised Iraq's fiscal consolidation efforts and noted significant improvements in its banking infrastructure. The CBI's foreign reserves have surpassed $100 billion, a remarkable cushion for a developing nation and a signal to other central banks that Iraq can sustain currency stability. This level of reserve liquidity gives credibility to the dinar's potential as a trade or even reserve currency among certain nations looking to diversify beyond the traditional dollar-euro-yen framework. Oil is another pillar driving renewed interest. Iraq is one of the top oil-producing nations in the world and has long been a major player in OPEC. Its proven oil reserves, estimated to exceed 145 billion barrels, are critical to global energy security. Recently, Iraq has moved toward pricing and settling some of its oil contracts in dinars instead of dollars, signaling an effort to localize economic value. This strategy mirrors similar moves by other resource-rich nations that are attempting to reduce their exposure to U.S. monetary policy and swift sanctions. If Iraq continues this trend, it could force nations with energy dependencies on Iraq to begin accumulating dinars as part of their foreign currency reserves. This alone could generate significant demand for the currency and drive central banks to reconsider their portfolio compositions. Beyond oil, Iraq's geographic and strategic positioning makes it a key bridge between East and West. It sits between Iran, Turkey, Saudi Arabia, Jordan, and Syria, nations with both economic clout and geopolitical relevance. A stable, revalued Iraqi dinar could be leveraged in regional trade agreements and infrastructure projects, including those tied to China's Belt and Road Initiative. Indeed, Iraq has already signed multiple energy and infrastructure deals with Beijing, some denominated partially in non-dollar currencies. If Iraq positions the dinar as a transactional bridge in this new multipolar financial order, regional central banks may be compelled to stockpile IQD to facilitate cross-border trade. Central banks are particularly sensitive to signals of currency reform and revaluation. One of the strongest indicators of Iraq's intentions was the formal de-dollarization policy that went into effect in early 2024. Under this directive, U.S. dollars could no longer be used for domestic transactions in Iraq. The ban was extended to private exchanges, retail transactions, and real estate deals. While the move initially sparked fears of inflation, it ultimately forced greater adoption of the dinar and helped restore confidence in its usage. It also signaled to international observers that Iraq was serious about restoring the sovereignty of its national currency, a move long encouraged by foreign advisors and local economists. The de-dollarization movement is not unique to Iraq. Nations like Russia, China, Brazil, and even some EU states have been exploring alternatives to the US dollar as part of a broader desire to escape the reach of US sanctions and interest rate policy. Iraq's alignment with this trend, especially as a key oil exporter, has added momentum to the global movement. Central banks watching this shift are considering the IQD not just as a currency with oil-backed potential but as a future component in regional monetary settlements. Furthermore, Iraq's currency reform strategy includes extensive collaboration with Western banks and financial institutions. Over the past year, reports have surfaced indicating that major institutions such as JP Morgan, Citibank, and HSBC have opened new channels with Iraqi banks. This includes correspondent banking relationships, liquidity services, and even talks of currency swap agreements. These relationships are critical. They not only provide validation of Iraq's financial credibility but also offer assurance to central banks that IQD-denominated transactions can be cleared, exchanged, and settled efficiently through reputable institutions. Another important factor is the alignment between Iraq's fiscal policies and its political goals. The current Iraqi administration has managed to balance relations with both the West and East, ensuring a level of diplomatic neutrality that is attractive to central banks concerned with political exposure. Iraq's economic councils have introduced sweeping anti-corruption measures, enhanced transparency in public spending, and improved revenue collection. As these policies take hold, they create an environment of long-term predictability that central banks look for before taking on new reserve assets. There is also a growing body of evidence suggesting that private banking institutions are actively preparing for a potential revaluation of the dinar. Leaked memos, insider commentary, and speculative trading activity have pointed to the possibility that a new exchange rate regime is being discussed behind closed doors. While such rumors have long circulated in the dinar investment community, the difference now lies in the coordination of state-level economic policy with real, observable banking shifts. If central banks believe that the dinar is poised to undergo a managed float or pegged realignment, they would naturally move to secure positions in advance of such a change. Additionally, Iraq has begun restructuring its debt profile, negotiating better terms with creditors, and reducing its external obligations. A nation with a manageable debt-to-GDP ratio, rising foreign reserves, and positive trade balance is viewed favorably by central bankers. This financial health reduces the risk associated with holding a portion of reserves in dinars. Iraq is also working to join international clearinghouses and financial institutions that support foreign exchange stability and transparency, which further boosts confidence in its monetary system. Digital modernization is another critical pillar drawing attention to the dinar. Iraq's adoption of blockchain technologies and central bank digital currency (CBDC) frameworks, still in exploratory stages, signals a forward-looking approach to finance. If the CBI succeeds in launching a digital dinar, especially one tied to oil contracts or government salaries, it could serve as a proof of concept for a modern monetary system in the Middle East. Central banks already experimenting with CBDCs, such as China, Sweden, and the UAE, are watching these developments closely. Beyond institutional and policy reforms, macroeconomic shifts are playing a major role in how the dinar is being perceived. Inflation in major currencies, rising interest rates in the West, and fractured global trade systems have pushed many central banks to seek alternative assets. Iraq's resource wealth, geopolitical neutrality, and recent reforms make its currency an unlikely but appealing option in this new era of diversification. The influx of bilateral trade agreements involving Iraq has also increased foreign exposure to the dinar. Whether through energy infrastructure, construction, agriculture, or telecom deals, more countries are accepting dinars for partial settlement, creating real liquidity use cases. As central banks see their national corporations entering dinar-denominated contracts, the incentive to hold IQD reserves becomes more practical than speculative. Notably, several regional and smaller central banks are rumored to have begun quiet accumulation of IQD in their reserves. These countries, primarily in the Middle East, Africa, and Asia, may not issue press releases, but trading data, shipping manifests, and bilateral banking flows point toward greater currency integration with Iraq. The rise in Iraq's SWIFT payment traffic and cross-border bank messaging volume supports this theory. The investment community, long criticized for overhyping the potential of the dinar, may finally be vindicated, but this time with facts rather than hope. As speculation turns into action by state actors and financial institutions, the revaluation narrative transitions from theory to policy. If the CBI moves forward with a currency reform that lifts the dinar to its pre-war value or establishes a managed peg, central banks that acted early will benefit from first-mover positioning. In sum, the global financial environment is changing. Central banks that once dismissed the IQD as volatile or speculative are now recognizing its strategic importance. Iraq's reforms, oil-backed economy, regional trade potential, and distancing from dollar dependency all contribute to a reimagined role for the dinar. While challenges remain, including political risks, corruption, and security concerns, the trajectory is unmistakable. The Iraqi dinar is no longer being ignored. It's being evaluated, accumulated, and possibly positioned for a role in the new global financial order. As central banks hedge against geopolitical uncertainty, diversify their reserves, and pursue new economic alignments, the Iraqi dinar has stepped out of the shadows. No longer a speculative footnote, it's becoming a strategic tool. And for those watching closely, the shift isn't just coming, it's already underway. Like and subscribe for more videos.